Hello, trading is closed on May 3rd, 2018. I looked for lower prices, which we got early. We had a target of 26.2859. Target was hit. These numbers aren't only targets, they're also support, resistance levels, and you can't get too much better than that one. MEJT says this rally is a false move. Gives us a target of 2621.95, most likely to print tomorrow. As always, gapping sharply in the undesired direction usually takes this number out of reach. Absent that, that's my call. Well, here was your big impulse down. You know I'm waiting for a break here. The call would certainly be a lot easier if we had just kept on dropping, but now we have mixed indicators. It's positive that we gapped down, new low, undercut the low, and then not only closed over these lows, we also closed over the intervening high. That's the blue line. It's a very positive sign, but it's invalidated if we gap and promptly take out this low. The other side of the coin, we has an all-day rally, and we couldn't close over these highs. It's a negative sign along with the lower target, but it's invalidated if we gap and promptly take out these highs. Now, tomorrow's pattern, I believe, is the one with the early low and the late high. Tends to rally all day long, but it doesn't have to, and if it doesn't do it, there's typically a big drop early. Now, futures aren't changed very much as I'm recording this, and I don't know if we're going to get a big drop early or not, but it would certainly make it a clearer picture if we did. Let's just say for tomorrow we have a target. Most likely is we gap outside the day's range, or we gap and we promptly trade outside the day's range. Next most likely is we close little change, have the big move Monday. Well, here's one possibility, but when you have mixed indicators, it isn't the only possibility. Here's your stilt. Here's your stilt. This is the middle of the diamond. If that's an inverted diamond on stilts, which it certainly could be, and this is the origin of the left stilt, that usually holds. Here's the prior consolidation. You take your Fibonacci target of the prior consolidation, that number is the same. So I would like for this to hold. Now, if that's going to hold, based on what I said earlier, the most likely thing would be we move down sharply at the open, undercut this low. That's what I'd like to see. I can't say it's a lock, but at least if it happens, you can explain it. And if it happens, especially if we gap under this low or trade under it promptly, it's real trouble. It's real trouble because if you take the high of wave 3, you take the all-time high, and you set your Fibonacci target, that's today's low. So we bounced off Fibonacci support. And if you connect the high of wave 3 with this high, that's today's low. So we have mixed indicators which often lead to a sharp gap outside the range. We have some reason to believe today's high is going to hold. So it doesn't require us to gap under this low. But if we did, you're breaking through a major trend line, through major support, and it's bombs away on the downside. All this could change at tomorrow's open. We'll have to see what happens. If we don't move down sharply, that's still favored to print, but the pattern tends to be positive throughout the day. But if this impulse is telling us where prices are going, it might be a tall order to gap under this low, but if we did, we could have a disastrous collapse. Have to see if that possibility comes to fruition or not. For right now, call for tomorrow is a quick move outside the day's range, usually with a gap. If not, we close, it'll change. Have the big move Monday. That's my target. Resistance here. If this support falls early, it's bombs away on the downside, and that's today's call.